I wanted to touch upon something that you've beaten the battle drum about many, many times, which is this idea of rehypothecation, right? And the
Yeah.
importance of Bitcoiners taking self custody. Like that's
Yep.
like you have to do that.
Yeah.
So, what is rehypothecation, and what is the danger that rehypothecation poses to Bitcoin?
Well, you don't get a true market price because it's fake supply. It's paper Bitcoin. So we now know that Sam Bankman-Fried was selling Bitcoin, and customers thought they were buying Bitcoin from him, but he didn't turn around and buy the actual Bitcoin on the market and hold it for his customers. He just took the money and did what he did with it, it would appear. So he sold them phantom Bitcoin. That Bitcoin didn't exist. Now, that Bitcoin, though, in a market appeared as though it was legitimate supply. Now, go back, and I did a big tweet thread about this about 2 years ago on supply demand and Hayek's. I had an aha moment reading something from Hayek. Um, I've always said that anytime you push the supply curve out and to the right, if you think about your supply demand curves, your price is going to drop when you push the supply curve out to the right, regardless of whether the supply that was created was real or fake. You're going to actually, holding demand constant, the price is going to drop because you now have more supply. Okay. But what I didn't realize at the time was that it also reduces demand, because demand for the real thing, because the fake stuff is satisfying demand for the real thing. People think they get the real thing when they buy it from FTX, and it turns out they didn't buy the real thing at all. They bought just a phantom instrument. Now, if we added up all the claims to Bitcoin that people thought they owned from their counterparties and looked at how many Bitcoins there are outstanding, I think 19.3 million or so, it would be a lot more than 19.3 million. So a lot of people were sold fake goods, period. It's fraud. A lot of people were sold that. And it unfortunately suppresses the price in those two ways.
And a lot of people were expecting, and I don't know if it's because of, a lot of people believe in and I do as well, to be frank, this, the theory of diminishing returns. The reality is that it's a lot harder for Bitcoin to double from 28,000 to whatever the double of 28,000 is, for it to go from $1 to $2. Like, it's a lot hard. It's a lot bigger lift. But I guess what I'm trying to say is that a lot of people were let down that Bitcoin didn't hit 100K last cycle. And do
Yeah.
you believe
Yeah.
that the rehypothecation played a role in that?
Yes. Yes. Because it clips off the top of the bull markets and it actually amplifies the bear markets on the downside. It's asymmetric. And again, it's all just logic. If people are buying the the real, if they think they're buying the real thing, but what they're actually buying is fake, then all else equal, the price is going to drop. Okay. And so that's going to clip the top of the bull market, because up until 2017, we didn't have a lot. Well, we did have scammers, right? You did have Mt. Gox and Quadriga. So you did have people who were running so-called fractional, right? They had more claims to Bitcoin on their balance sheets that they'd issued liabilities for than they actually had assets on their balance sheet. We know in Mt. Gox's case that was true. The reason was because they were hacked and then they tried to cover it up. Quadriga, who knows what really happened there, but clearly they sold more Bitcoin than they actually had in inventory to back up those liabilities. Okay, so those two companies helped push the Bitcoin price lower at their peak than they otherwise would have. Now, once we got in 2017, where you started to get derivatives markets, the derivatives markets played with the spot price even more. It can kick around the spot price to a tremendous degree, and cash settled derivatives do it less than physical settled derivatives. And I started writing in 2018, warning that when backed, the sister company of the New York Stock Exchange was getting into the Bitcoin futures market, that here comes paper Bitcoin. And it ironically, backed didn't do it as much as FTX did, because backed was limited to 2.5 times leverage in the futures markets here onshore, whereas you had FTX at 125 to 1 leverage. 2.5 times compared to 125 times, big difference.
Yeah, absolutely. So do you think we'll ever see a Bitcoin ETF, a spot ETF? Does that even
Eh,
matter?
doesn't matter to me. I'm on the record that that's a double-edged sword. It
Mm,
certainly would be better for as a market structure instrument than GBTC. The problem with the closed-end funds is that they can trade at big discounts or big premiums, usually discounts to the spot price because the fees obviously have to get passed through. Um, and so unfortunately in GBTC's case, it traded at a huge premium and now it's trading at a huge discount. So it's just not tracking the spot and it's not helping investors. It's not been a safe product for investors. And I do wish that the SEC would allow a restructuring of that. But they're very afraid of allowing spot Bitcoin trading into regulated markets because they think that they're going to be implicitly endorsing it if they do.